Nicolas, welcome to the show.
Stephan.
So there's lots been going on since we last spoke on the show. Of course, we had a chance to catch up in El Salvador, so that was great with adopting Bitcoin. Do you want to just give us a bit of an update? Where are you at and what are you working on these days?
Yeah, sure. So we met back, I guess, in November for the first time in person at Adopting Bitcoin. So we are continuing to focus on our wallet in El Salvador called the Bitcoin Beach wallet, which is very exciting to see how Bitcoin adoption is rolling out in El Salvador. We are also generally working on, so at Galoy as a company, we're working on open source software. The goal is to develop an open source framework to have banking on Bitcoin. One of the key features that we have been working for the last couple of months is the integration of USD into the wallet, which I think is something we want to discuss more today.
Right. And I think the other point that's worthwhile talking about is when you're in Central America, South America, it seems that there is a stronger demand for stablecoins and USD value or representing USD value. So if you could just explain from your perspective that you've seen being on the ground, why is that, and why is that so important?
Yeah, so if you live in the US, you have USD as your checking account, and of course getting exposure to Bitcoin is great because then you can have a tool that can beat inflation. But if you're living in a country that is not on the USD standard, first, getting access to USD is already a huge improvement compared to your local currency, because this local currency has probably much higher inflation than USD, and therefore, like, if you can get USD, it's great, then your inflation is much lower than maybe the inflation in your country, right, with your local currency. One of the advantage of USD is the overall low volatility compared to Bitcoin, especially in the short term, right? So if you're like a merchant, or if you're someone that have USD obligation in tomorrow or next week or next month, it's good to have this. If you need to pay $100 in a month, it's good to have $100 in your checking account so that you can pay it in a month, right? And so for me, the idea is that you can think of USD can be your checking account, and maybe BTC can be your saving account, right? And so if you have money, you don't have obligation in the short term, then it makes a lot of sense to convert it to BTC and save it for the long run. But yeah, for a lot of people, for instance, in El Salvador, like merchant, that doesn't have a lot of saving, right? Having USD for them makes sense because they know that they have the assurance that even if Bitcoin were to do minus 50% over 2 months, which happened, they can still pay their bill, right? And this is key. So it's basically the first step if you're in developing countries, to make sure that you have enough money to pay your recurring bill. And when you get to this stage and you have extra savings, then you can convert it to Bitcoin. And one of the, I guess, challenging point is to move from your local currency to Bitcoin directly, right? It's like you make 2 steps at a time. And so having the option to get some form of USD in your wallet is a great addition to have a BTC wallet.
And I can understand that there might be some difficulty operating if you're trying to operate in an open source world, but then also still interacting and interfacing with the fiat banking system. So do you have any thoughts or ideas to share on how to achieve that, or at least how you're thinking about that?
Yeah, it's actually challenging, right? Because if you think as a Bitcoin environment, the real advantage of Bitcoin is it is permissionless, right? So if you can buy Bitcoin somewhere, you can take possession of it. You are the bearer assets of this Bitcoin. It's also make it straightforward to launch like a Bitcoin bank, like in El Zonte, in El Salvador, like we did 18 months ago, as an experimental project. And we see that now this experiment is being replicated in other places, like in Costa Rica with Bitcoin Juggle. And basically, you don't need permission, right, to start a Bitcoin bank, or just get Bitcoin in your non-custodial wallet. But as soon as you want to get USD, then you need to think about how will you be sourcing this USD, right? Probably the most common option in the, I would say, broader crypto sphere is to get stablecoin. And so, you can send Bitcoin to some exchange, and maybe you buy USDT with it. But then you have an issue with this USDT. I have maybe USDT on my Bitfinex account, but what should I do with it, right? I can leave it on the exchange, but if I want to take possession of it, I need to withdraw it to some wallet. And USDT is great because it's compatible with many networks, but it's also a downside that is compatible with many network, right? And so do you want to withdraw it on Liquid? Do you want to withdraw it on Bitcoin layer 1, the Omni layer, or to some other protocol like Ethereum or Tron? And because it's compatible with so many protocols, it's not very maybe if you have I have USDT on Liquid, you have and you show me a QR code which is like from Ethereum, right? And I cannot send money to you, right? So it's not very compatible between wallets. It needs to be on the same protocol, and so stablecoin have downside. One of the other downside of stablecoin is that you're also trusting the issuer, right? And so now so stablecoin are great because they are a bridge between maybe permissionless money that Bitcoin is and fully permission USD that the USD in the fiat system is. You can still get some stablecoin in a semi-permission way. I mean, you still trust there is an issuer, maybe Tether, and you trust that they really have the money somewhere. So there is some trust involved, but it's still less permission than having USD in a bank account. So there is some great trade-off for stablecoin. But one of the biggest drawback is this interoperability issue, and also the fact that on many protocols there will be a high fee, right? So if you have USDT and it's on your Ethereum wallet and the gas fee are high and you need to pay $10 to send it to another wallet, then the use case that we are targeting on our side, which is really using Bitcoin as money, is that you need to be able to buy your coffee with it, right? If you're in El Zonte and you have a $5 bill, you should be able to pay for it. If you have to pay $10 in fees, it doesn't work. So there is some limitation with stablecoin.
Yeah, so just to summarize then, there are different technological approaches. And I guess, as you were just saying, there are stablecoins like Tether, and they can operate on different networks, but then there might be issues around interoperability. And so I guess this also comes back to the way you're building things with Galoy. You are developing banking software and you're trying to make it Bitcoin friendly, Bitcoin native, and be open source. And so could you tell us a little bit about that choice and why you're going that way?
Yeah, so we're building open source software, right? And on open source money. And we think there is I said there is a limit in the compatibility with USDT because it's on so many protocols. But if you think about, is there a sharing point where maybe a lot of the industry is going that will create this compatibility layer? And for me, the answer is Lightning, because Lightning which is a layer 2 on top of Bitcoin, the layer 1, bring instant settlement. So now I can send money from me to you. It's almost instant. And there is also no counterparty risk with Lightning, which is a key. So if I'm able to somehow convert my USD, whether it's in a bank account or in some other way or in a stable coin, but when I send a payment, if I can send it to Lightning, then you as a recipient, you can have any wallet as long as it's compatible on Lightning. You can receive the money, right? And maybe your wallet is just like a Lightning wallet, and in that case, I will send you sats, even if it's come from some source of USD. I sent you sats and you receive sats, and maybe your wallet will convert it to euro. Maybe your wallet will convert it to another currency after it's being received. But the way to send the money is really using Bitcoin, the network, not Bitcoin the store value, but really Bitcoin the payment system through Lightning. And yeah, this works because we have Lightning.
Right. And so if you could just give a bit of an overview of the Galoy software that's out there in the wild, just so people get an idea. So obviously started with the Bitcoin Beach wallet in El Salvador.
Yeah. So we start working on the software stack 18 months, close to 2 years ago now. So what we have is really like an open source, different repository that allow anyone to launch their own wallet using Bitcoin and Lightning, and also ways to connect to a fiat environment. So we have a set of repositories, we have a backend, we have a web wallet, we have a mobile wallet, we have a tipping services. We're also working on a dealer, which is a bot to trade between fiat and Bitcoin. And so anyone can just fork our repository and launch their own wallet. A company a project that did that last month that is getting traction is called Bitcoin Jungle, for instance. And they have launched a wallet in Costa Rica, and now they have, I think, some thousand of users using their wallet to get Bitcoin. And this team in Costa Rica is not trying to replicate the success of Bitcoin Beach in El Zonte, is to get adoption in Costa Rica. And the fact that our stack is open source, it allows anyone to launch their own wallet effectively.
Right, and it's really cool that anyone out there in the world can just take it and try to replicate it. And I suppose I'm curious as well, in your mind, while we're here, how essential was it that in the case of El Zonte, there was a donor who sort of seeded the town or the project? Do you think that's an important aspect of it, or do you think it can sort of build up off its own steam?
I think it's really helpful to have someone that seeds the project. A donor is a good way to do it. There is also the fact that the team in El Zonte also was very good at bringing attention about El Salvador, bringing Bitcoiner in El Zonte. Mike Peterson have done a tremendous job, like bringing awareness of the Bitcoin community, right, about El Salvador. This is how I learned about it. And why I was like, okay, it's really a good project. I want to be part of it. So it's a set of contexts. But if you look at Bitcoin Jungle, for instance, there is 3 people that are starting this project, right? They have an entrepreneurial mindset. It's not like there is a donor per se, but there is like a small team driving this with technical expertise and also like economic, understanding of how, are they going to how they're going to make this work, and they're doing it it's a not for profit way, but they think about, okay, there will be costs associated to running a wallet, and they are thinking about having ATM so that they can also do this bridge between physical fiat and Bitcoin, and there is expenses related to that, so they want to cover their expenses, which is great, because if they can show to also the Bitcoin community at large that, hey, you can launch this wallet and you can, it is self-sustainable, you can make some money out of it. It's a great way for all around the world having this Bitcoin Beach-like project popping up. And this is how we can, seed in every country and show to maybe some of their local government or, government at the state level that, hey, there is this initiative that is going on. And look, it's very good for tourism. It's very good for economic prosperity in this area. So maybe we should look more into this.
Yeah, and so the idea then is that if there's news and tourists come and so on. It builds opportunities in the space. And of course, it's a big learning opportunity for a lot of people, because for them, it's their first time using Bitcoin. And so I think that's potentially what we were getting at as well, around the use of US dollar value in some of the wallets that are there for the beginners who are new to Bitcoin. And so what does it look like for those people when they're learning about using Bitcoin and starting with Lightning, but then also wanting a US dollar representation of that value, as opposed to, let's say, the orange-pilled person who's already thinking in sats and values their net worth in sats?
Yeah, so one of the first learnings that we got initially was that, so initially the wallet was in sats, right? Like you will only see sats, and maybe there was a few screen where you had like a US dollar equivalent. But the first thing was like, no, we really need to show, center in the wallet that, this is the amount of dollar you're sending, this is the amount of dollar you're receiving, even if there is a sat equivalent. It's true, because people think in sat, right? People think in dollar, and you want to help them understand what is sats, and what they should understand, because the value change between sats and dollar and things like that. But really, your bill in El Salvador, if you go to McDonald's or go to a restaurant in Azonte, is it's a dollar bill, right? At the end of the day, the price are still in dollar, and so you want to make sure in the wallet that there is a notion of dollar. But the wallet currently is really a wallet that have BTC in the wallet, and therefore it's as a price of BTC to USD change, the USD value in a wallet is changing. And so this is obviously great if you're in a bull market. It's not that great if the price of Bitcoin is going down. And so people are looking to get USD in their Lightning wallet, right? And so that now they can transact with this broader ecosystem. So if they go to a restaurant in El Salvador that have a Lightning wallet, they will want to send money to this wallet, but they want to keep maybe $100 in their wallet. They don't necessarily want to have 100,000 sats. And so this is a problem we have been looking at, and we are trying to resolve. And so when you think about how to do that from the wallet from the perspective of like a custodial or shared custody wallet, like we do, is that, okay, there can be maybe 1,000 users in the wallet, and they each have $10. So maybe in aggregate you have $10,000, and so you need a way to store this $10,000, right? So one of the first thing you can think of is, okay, I can get a bank account in a bank, and I can put this $10,000, and then I'm good, right? It's probably the safest way to go, because if you have money in the bank, assuming they have a banking license, and I mean, the risk is, you still have a risk that the bank will fail. There is some counterparty risk, but this risk is not necessarily extreme. And the challenge here is that you need to have a bank that accepts to give you what we call an omnibus account, which is like a bank where there is multiple people that have money in this account, right? And you, as a wallet provider, you need to maintain the ledger, and so there is a very high bar for a Bitcoin company to get access to an omnibus account. So this is a great option, but it's also very hard. And this is when I come back to the idea of permission-less money versus permission money. Here, you're really going forward the very permission side of the money, because you need the bank to agree on what you are doing, right? Another way to look into it is you could say, okay, maybe I will use a stablecoin in the backend, right? So now you don't expose stablecoin to the end user, but if the user is sending you some money over Lightning and say, okay, I want to store this money in USD, what you can do is that I would say the maintainer of the wallet, you can say, okay, I receive some sats, $5 in equivalent for $5, and I will basically send the sats to an exchange, and I will buy USDT with it. and then you keep the $5 that this user sent you in an account where you have USDT. And this is easier to do from a regulatory standpoint because now you don't have to convince every bank. You have to have an account as an exchange. This is easier to do. There is a third option, which is to use derivative market. And this is the one we have been developing for some time now. The idea is that if you want to get an equivalent of $5 in your wallet and you don't want the value in change in dollar, if you get some sats in your Lightning wallet, you can go to a derivative exchange and sell a position on this derivative exchange so that for every $5 you have in Bitcoin, you have like minus $5 in the derivative exchange. So that like as the price of Bitcoin change, all the gain you will have or all the loss you will have in the physical Bitcoin, you will have an opposite side of trade in the derivative on the derivative market. And so at the end of the day, the value of Bitcoin can change. You still have the same amount of dollar overall. So this is the third option. And the last option that is probably will be here in the future, it's still a bit early, is the idea to use a DLC contract where you find a counterparty and say, hey, I just want $5 and we are trusting an oracle that, like, okay, maybe in a month from now, like the value of the number of sats will change depending on how the price of Bitcoin has been changing. The use of DLC contract is something that I'm very bullish on, but it's also, I think, far away. So it might still take a few years before we have this like DLC contract. The reason I'm really bullish about DLC contract is because then we will be able to have USD, an equivalent USD in the wallet with very minimal trust to any counterparty, which is great.
I see, yeah. So let me just summarize those just for listeners so everyone's following along. So you outlined a few options there. So one is just straight, literally dollars in the bank account, and it's just managed centrally. And that's, I think everyone kind of understands basically how that would work. And then secondly, you were saying it would be like this idea of, well, doing something similar to that, but just stable coins and using stable coins to go out to the exchange, and maybe somebody who's managing that, let's say in this example, Bitcoin Beach, somebody who's managing that wallet has to go to the exchange and sort of do that role of moving stable coins into USD and back and forth. And then I guess the third option you're saying is somebody centrally is doing like a derivative market action to have a net opposing position to the amount of USD value that the users of the aggregated users of all those accounts at that wallet, so let's say it's $10,000, they would need to have that opposing position of a derivative of that. And then the fourth option, as you were saying, is the future. Hopefully, if we get this idea of a DLC stablecoin or some kind of contract for difference option, then that would enable a similar kind of functionality where people who want to have some USD value can represent that inside their balance on their account balance in the overall wallet. Have I got you right there?
Yes, that's right.
Yeah. And so I guess probably the first few questions people might have would just be, what happens in like times of big market movements? Like, are there opportunities or risks there that, let's say, especially in the case of the derivatives option, so probably options number 3, where if, let's say, they're, like as an example, in ETFs, there's this thing called tracking error, where if you're trying to track an index, but actually they weren't able to exactly track that index. So would a similar kind of thing happen here, where maybe you couldn't track exactly the derivative position against what a lot of people were doing? And I mean, as an example, let's say the price is really dumping hard really quickly, and so people are trying to get over to USD value, but let's say the derivatives, people couldn't get over to that in time. Is that something you've seen? And I guess you would have seen obviously big price moves in the last few months.
Yeah. And so derivative is, I guess, where we have done more of the work right now. The the main reason for why derivative is interesting is because of something called the cash and carry trade. So what is cash and carry trade? It's the idea that in general, the price in future market is higher than the price of the spot market. Why is that the case? It is the case because there's a lot of people that are very bullish on Bitcoin, and they understand that, over time, the price of Bitcoin tends to go up, and therefore it's good to be long Bitcoin. And if you want to be very long Bitcoin, you leverage long Bitcoin. And if you want to be leverage long Bitcoin, going to the derivative market is one of the easy way to do it, right? And this tends to push the price in derivative markets, up higher than in the spot market. And the idea of the cash and carry trade is to say that, okay, because the price in the derivative is higher, I can short the derivative, I can buy the spot, and I take this arbitrage of the difference between those two markets. And I can do this trade over and over again. And if we look at, for instance, the exchange that we are using for our bots, we use OKX, which is a derivative platform that have Lightning enabled. We, on average over the last year, the yield on this arbitrage is 18%, which is not negligible, right? It means if you have $1,000 in your wallet, a year after you have $1,180 in your wallet, right? So there is some yield to be generated from this trade. Now, as you point out, this trade is not without risk, because the risk is that if the market moves very quickly, because you have a leverage position, right, you can get liquidated, right? And you don't want to get liquidated. So in our implementation, what we're doing is so the first thing to understand is that because we're using the reason why we get this yield is really because we take the opposite side of the trade versus what most traders are doing. So most traders are leverage long. Here, because we use a derivative protocol to hedge, we actually take the opposite side of the trade and we're short. And because we are short, we get this yield, but also we can think of what is the highest risk, right, of liquidation. Is it when we're typically long, or is it when we're short? Typically, a lot of the liquidation might happen where you're long more than you're short. Because, so for instance, if you get a leverage of 3x, for instance, the price will need to move more than 33%, right, before you get liquidated. And if you look at when is there like a price that, Bitcoin move more than 33% over a very short time, like let's say over, less than an hour. If this happens, this will happen typically when Bitcoin go down versus when Bitcoin go up, right? Of course, if you have a bot that is very, reactive, you will not get liquidated if you can just change your position, right? And you can, if you need more collateral, because suddenly in our case the price will go up quickly, then we will send Bitcoin to the exchange and make sure like we have always, a margin of collateral that is sufficient to ensure that given some backtest, we never get liquidated, basically.
I see. Yeah. So essentially it becomes around how much Bitcoin you are storing at the exchange as your margin, so that you don't get liquidated while these movements are occurring. And so I guess how much manual management does it take for that?
And on this, it's really a risk. It's a risk parameter, because if you're taking a short position, you could actually get just a short position of 1x or like minus 1x. And in that case, you will not get liquidated. But if you just use no leverage, basically you just get this short position of minus x, then you are increasing your exposure of an exchange risk, right? Because then if the exchange got their money taken away, then basically you will lose 100% of the dollar value that you have in the exchange. But if you just use a leverage of 3x, then you basically you trade 2/3 of the exchange risk, because now like if the exchange have an issue and you cannot redeem your Bitcoin, then you will lose this money. But now, because you use some leverage, like you have some liquidation exposure, right? So it's really about risk management. You can get to a stage where you have no liquidation risk, but you have full exchange risk, or if you use some leverage, you have less exchange risk, right? But then you have some liquidation risk that you have to manage with your trading bot.
So is the idea that the trading bot is just operating at 1x, or is it actually operating at a multiple level of leverage?
Yeah, and so we have, in our GitHub repository, Galoy Money, we have a repository called Dealer, where we have implemented this strategy. And currently, the default settings is to use a 3x leverage, but it's something that you can configure depending of your risk appetite.
I see. Yeah. And then who's doing the management of that? Is it the community who are like certain, I guess, semi-trusted or community leaders, or who's doing that actual management of that aspect of it?
So this the idea of having USD as part of the Galoy stack is still work in development. So currently we are running like some tests with exchanges, but it's not being rolled out to the general public, right? So currently there is no
still in testing.
No one is really managing
development.
The idea is to bring this to the market in the upcoming. It should be ready on the backend in the upcoming few weeks, and in mobile wallet in the upcoming few months.
Cool. And so what kind of costs are involved? Because as you mentioned, there is the cash and carry trade. So depending on the, generally speaking, Bitcoin, I guess it's generally true that it's been in that contango position where the future price is higher than the current price. And therefore if you're going the other way, that you're getting paid that premium. So is that the general idea then, that the community, or let's hypothetically say, this is the feature that's getting rolled out, is the community then going to get paid some funds, or is there going to be a fee to pay in order to have that USD valuation there available for the users of the wallet?
Yeah, it's a good question. How will this be rolled out is depending of so at least on the Galoy side, this tool would be available to people that deploy wallet with our software. How they want to offer these services to their end user will be, depending of them, right? I expect initially to typically the cash and carry trade can be used by the people doing the wallet to just fund their operation, right? And this is exactly how banks work today. If you think about banks, what typically they get is deposits, typically free deposit from the user, and they use this deposit to give loan to people so they can do things with the loan, and hopefully they get paid back, with some interest. And this is how 101 banks, works. And so here in the wallet, you can think it's very similar, right? You get this deposit and you can get some yield. And, similarly to banks, like, banks may offer us to give the yield back to the user, some part of it or all of it, or depending of their business model. Another fee that you can think of, as using the USD is there might be some spread to convert from USD to BTC. And how much spread you want to charge is a parameter that you can set, right? But the idea is like, do you want to charge 20 basis points? Do you want to charge 1%? Do you want to charge 0? Charging 0 is risky because then people can try to maybe gamify your conversion rate, and if they see some mismatch in prices, they can try to exploit it. So it's typically a good practice to charge some spread, but this spread can be minimal, right? And I believe if we really want to get Bitcoin as money, but still have the option to use USD, where you can have your checking account, right? Your spread to convert from this USD to Lightning should be as much close to 0 as possible, because if you charge 1 or 2%, then there is a lot of friction, and you might say, okay, sure, maybe I'll do it one time to buy my Bitcoin and then I stay. but if you want to buy a coffee with it, like, you know, it should be really, you know, cents or even, you know, sub-cents, right, to do this this payment. But yeah, trading fees is another way as basically a wallet owner to also get some revenue. This trading fee should also be passed. I mean, the exchange is, so to get this hedging position on the chain, you also have to pay trading fees, right? So you also incentivize as a wallet to like just make sure that you don't lose money, and whatever the exchange where you're hedging your position is charging you, you want probably to pass those fees to the end user.
Right. So as an example, let's say you're operating one of these wallets, you've got a bunch of users, and the idea is that if every time they're flipping between Bitcoin and USD, that you're charging them a trading fee, because in turn, when you go to your exchange and you're doing your operations there, you're getting charged a trading fee. So the idea is you're sort of passing through the costs, or maybe there's a little bit of a extra profit there that you're using for some other kind of day-to-day management of the overall system and to help cover the running costs. So maybe that's one angle there. So as you were saying, sorry, did you have something to add there?
Yeah, one interesting aspect here is you can, so I'm really striving for, like, if you want to use, you know, Bitcoin flowing, you know, seamlessly from a USD account, this fee should be very, very minimal. And one way that is possible to also reduce those fees is that if you look at the flow of the wallet and you see that overall, maybe during a day, like, you know, there is as much USD that got out the way that USD that got in, right? So like, let's say we have this, you know, 1,000 users that each have $10. So there is $10,000 to be kept in USD. And you know, there is like 10 users that's on $100. So there is like $1,000 going out, but the same day there is 10 other users that get $100 in. So basically you start at $10,000 at the beginning of the day. You know, maybe it fluctuates a little bit, but you end up at $10,000 at the end of the day. Maybe you don't need to, you know, hedge your position further, like on this day, and therefore you don't have this trading fee on the exchanges, right? Because you just settle everything, you know, intra-ledger, like within the within your own.
So you kind of do all that netting inside. So I guess walking that through as an example, let's say you have 1,000 users in this overall wallet, each with an account within that wallet, let's say, and each of those users might have a Bitcoin balance and a USD balance. And what we're saying here in this example is, let's say they each have $10 in their USD balance. And so, of course, they might have been flipping back and forth between Bitcoin and USD, but just for the sake of this example, 1,000 users, each with $10 in their USD balance. So the overall balance is $10,000. And that's the balance that the management team are having to deal with at the exchange. But as you're saying, if over the course of the day, some people had to take some money in and some people had to send some money out, you could net that all internally such that you minimize the amount of actual trading that has to go on at the exchange, or at least changing the position size at the exchange. And so in aggregate, that wallet, the 1,000 users of that overall wallet have $10,000 USD that needs some kind of reflection out there in one of those four options, as we said, right? Either at the bank account, either using stablecoins or using the derivatives, or using the DLC stablecoins potentially in the future. So is that a accurate summary there?
Yes.
Yeah, gotcha. And so then I guess it just comes down to what kind of risks the community would be comfortable with, but also what are the benefits to them, right? Because the benefits for them are that people who are relatively new to Bitcoin can get eased into the process of being exposed to Bitcoin, and maybe over time more and more users just say, no, I'm just going full Bitcoin, I don't need to do all this back and forth. But for people who are newer and need to be able to make payments in USD, well, then they're the ones who might need to sort of have a balance of both sides, like some Bitcoin and some USD balance. So is that that's kind of the main benefit and risk there that you're
exactly. And if you think about your journey, you know, going from not knowing about Bitcoin to, you know, measure wealth in Bitcoin, there's like many steps. The idea is that in developing country, I see so much reason for why people might want to be plugged to Lightning, right? Because if you want not to receive money from another country and you have a Lightning enabled wallet, then you can send money instantly from any other place on Earth, and only Lightning enables this, right? And for zero fee or very low fee. At the beginning of your journey, whether what the sats you receive, whether they settle in Bitcoin or whether they settle in USD or maybe in Euro, maybe some other currency, it doesn't really matter. What matters is that there should be as much people plugging to this network as possible, right? Because the Lightning network is a network, and the network will really grow to the square of the number of users, right? The Graham law. And we want to plug as much people as possible to this network, right? Is a step one, probably if you think about Bitcoin adoption in developing country. And then after they can get used to this QR code and understand how this new payment system works, then they can obviously learn about the other aspects that are key to Bitcoin, the fact that it's permissionless. They can use it with a non-custodial wallet. It cannot be censored, and it's like protection against inflation. They can learn about this after, right? Why they use the wallet. Something that we learn from El Zonte is really that what's key is for people to start using the wallet. It's much better than trying to think about what is money and why Bitcoin is a superior form of money. You really want to approach this from a practical standpoint, right? Let's just install this app, try it, send money to your friend, go to a shop and buy something with it, and then it will generate questions from you, and starting with a perspective where the way that you start using have a USD balance, makes the hurdle to get started lower, in my opinion.
Yeah, and so the other advantage I can see with this is you're getting at this idea of permissionlessness, because that means the user can have that USD representation without having to go and set up a bank account and all the same problems that are associated with having to or being able to set up your bank account, because people get their accounts shut down, or maybe they don't have the right KYC documentation required, maybe they don't have the physical address or all these other requirements. So this is allowing them to have some sense of the best of both worlds, that they can have Bitcoin exposure, but also have some USD or retain some USD exposure if that's really what they want, if their bills and their outgoings are denominated in USD. So I guess that is relevant for lots of people, even if you're in El Salvador and you can pay it in Bitcoin, because you might still have an outgoing. Let's say you have to pay your rent or you have to pay your staff, and that contract or that agreement is denominated in USD, not in Bitcoin. So even if you can pay it in Bitcoin, if Bitcoin has just come down from 60,000 down to 37,000, like it is roughly right now, then you still have to find a way to come up with that shortfall, which is, if you were doing it all directly natively in Bitcoin, well, then that's something you'd have to think about. So I guess it also does turn a little bit on how many users of that wallet are flipping between Bitcoin and USD in the course of that day, because there might be people during the day who are now saying, oh, I need to switch over to USD right now. And I guess this is something that, as an example, Chivo, I believe you can do this with Chivo, right?
Yeah. So to your first point, I really believe that thinking about USD as your checking account, BTC as your saving account is the best framework, at least that I have. So that your extent of your amount, you should keep it in the denomination, the currency denomination of your obligation. So typically USD in El Salvador. But then the extra money that you have, buy USD with buy BTC with it. To your point about Chivo, yes, Chivo, you can go from back and forth from USD to BTC. What we have seen, at least on Twitter, over the last couple of months, is that they initially were saying, hey, you can move from BTC to USD seamlessly, and there was no fee initially. But because there was no fee, it seems there was people that try to do some form of scalping, where like basically you could say, I think you had 1 or 2 minutes to say, hey, yes, I confirm my trade between BTC and USD. And so you could try to gamify it, like, okay, I want to sell my Bitcoin, but no, I look at, is the price going up or down? And I will only sell my Bitcoin if the price is going down after I have my quote, right? And I think now they are changing their strategy, because I see that, I mean, offering absolutely free conversion to their users can be dangerous because they can, people can abuse this trade basically.
Yeah. So that's something in general when you're offering a quote and you're saying this quote is valid for this amount of time. Well, then people can try to play with your system there.
It's the free option problem.
Yeah. That's right. But I guess the idea is you're making enough money overall as a business to make up for these kinds of things. But yeah, certainly this is, and I mean, in the case then, let's say with the Galoy stack, do you know how are you thinking about that? Would that be offering them a free option, or would it just be like, exchange Bitcoin to USD, but you're just paying a trading fee?
Yeah, there will be some trading fee. We want to strive to be very low. It's maybe in the 10, 20, 30, 40 basis point. I'm not sure yet. And the thing is, it might change depending on the market condition. I think this is a key part. So if basically the price is not moving much, you can have a very tight spread. Now, if the market is moving rapidly because it's it's in the middle of a liquidation cascade, whether it's a short squeeze or a short long, this is a scenario where you need to protect yourself by having a larger spread. So it's also very dependent of market condition.
I see. And so the idea then is that this could be an option there for people to provide a USD value for the users out there, and maybe longer term, maybe the DLC stablecoin thing comes to fruition. I guess, is that how you're seeing this, that they might move to people, or even your wallet might move to that kind of solution in the future potentially?
Yeah, so the way we are building on the software side, on our side, like there is really what we call the dealer part. So the current implementation that we have for the dealer is using derivative contract, but this could be moved eventually. So there is an interface, and you could build another dealer that could be for using fiat on a bank account, or using stablecoin, or in the future using DLC. So like it will only be basically how do we get USD that will change, like in the backend. And this is you could swap, or you can even combine them. You can say, okay, I want to have 50% in stablecoin and maybe 50% in like in derivative, right? So that like you limit your risk. And yeah, in the future, like any option should be doable. It's just that on our side we just have, I would say, one example which is using derivative as of yet. Everything that is related to the wallet side, the visible part for the user, like this will not change. You could get stablecoin, or you could get using derivative in the backend, or USD in a bank account. Like this should not change anything for your day-to-day user using your wallet, right? And so this piece should not. There should not be any change on this side.
Right, and the cool part is that this is functional today. So was it OKCoin you mentioned you're doing this with? Or?
Yeah. The dealer we're using is OKCoin. So we look at the different derivative exchanges. We start with OKCoin because OKX actually, OKCoin, because they are plugged to the Lightning system. They have large volume. So the idea in the future is to make it more robust by having more option. We also currently use perp, but we could add also future, so that like, because the risk profile between perp and future are a bit different, but we use perp to get started. But the idea is really to have this interface where like you could yeah, plug whatever dealer you want. And if you want to offer to your end user like some USD in a bank account, it will be possible. So
Yeah, so this could really open it up in terms of who could onboard into using Bitcoin even in a incremental fashion, right? Without having to be fully committed to the Bitcoin vision from day one. So I guess that's probably the advantage that I could see, and that this could be replicated in many different communities all around the world. So that's probably the hope, right?
yeah, you're right. I think the idea is that it's today take a lot of engineering effort to come up with this type of solution. But by making it open source, right, anyone could start their own with like, so I'll come back to this Bitcoin jungle maybe one last time. So the reason I like, this project is because it's the first time, someone has been using our code without our involvement. And they launched their own wallet on the Apple Store and the Play Store in 2 weeks from like not knowing our code to have like a wallet functional in a matter of only 2 weeks with 2 people on the team working on the engineering side, right? So it's like 1 month engineering to get from nothing to like a wallet working, which is just awesome, right? Because you think about the Bitcoin company, like I don't know, the River or Strike, like they have a lot of engineering, right? Or Swan, right? A lot of engineers are on their team to build this software. And for me, Bitcoin reached a stage that this market is big enough that it makes sense to have open source solutions that exist that people can just adopt on their own. And I think it can really help to have a lot more solution in many countries all around the world.
Fantastic. So what are some of the steps that you see being required to make this to make more people take this idea on? Do you think it's more about getting, say, lots of news and stories showing this thing to give people that idea, or do you think it needs to be like shown as a success, in more and more countries or more examples outside of, say, El Zonte, to show, oh look, it wasn't just one place, it's multiple places it's working in?
I mean, I think for getting more Bitcoin adoption around the world, especially in developing countries, these projects are really helpful. And I think we saw what El Zonte did, right? On our side, from the Galoy side, the current limitation is engineering, right? We need still to do a lot of work to make it easy for anyone to deploy their wallet. Luckily, if you know Kubernetes, if you know React Native, so there's different stack on our tools that if you know them, you can get very quickly to having your app on the App Store. But if you don't know them, it's still like a many months process to get there. And so we are working out to like giving all the tool to make it very easy to deploy your own wallet. But there is still a lot of engineering effort to make it like a lot easier, let's say.
And one other thing when it comes to developing countries is just the generally low level of income or wealth that makes it difficult to save, because people are living so close to hand to mouth, or they're living very close to their level of ability to feed themselves and do all the normal essentials. So I guess that's one just general difficulty with getting Bitcoin adoption in these kinds of scenarios, isn't it? But at the same time, I guess the flip side is, for some people, it is a way for them to start saving that's more accessible than, say, buying a property or buying stocks.
Yeah, and if you think about El Salvador, 70% of the population pre-Bitcoin law, I don't know how to think about the statistic today, but 70% pre-Bitcoin law didn't add a bank account. And so it's not even that, you cannot, it's like you cannot save, you cannot get started, right? If you don't have a bank account, property is not even on your mind. It's like you have to deal with physical cash all the time. You don't have another option. And even sending money to, if you want to pay your electricity bill, basically you either need to take a bus and pay the bill directly to the water provider, or you pay a third party that will take you cash and take a fee just to pay your bill. And so just introducing Lightning to this population, you go from people who have no financial, no bank account, not any financial access, to like they have one of the best tool, if not the best financial access, to the world. And from here, yes, they can start saving. Even if it's dollars, that's great, because previously they would not think about saving. And in Azonte, like you start introducing, right, the notion of saving to the language, right? Because when you don't have a bank account, you don't even know or how to get started to that, right?
The other question I have is also, what kind of other infrastructure is required to, just as an example, ATMs, being able to go from a Bitcoin ATM to get some cash out, or being able to, let's say, have a peer-to-peer market, or let's say being able to redeem in, say, a stable coin. How essential do you think these things are for developing countries who are looking to have communities take Bitcoin? How important is that broader infrastructure?
So I think ATM is key, because it's really a psychological reason that I see, where you're being exposed to this Bitcoin thing and you have no idea what this is, and this it feels very digital, because it is. But if you don't have a bank account and you're used to have physical bill to pay for things, money is very physical, right? It's not digital, even though the dollar is digital, the euro is digital. But for people living in developing countries, they don't have access to bank account, like money is physical. And an ATM is a bridge between this like new form of money and the cash that they know, like the money that they already know, and it help see them that I can put Bitcoin to this machine, I get cash, right? So like maybe this is money because I can change it whenever I want, like it's available, it's easily convertible, and so for this reason I think ATM is key. Also, the local market is something that has developed a bit naturally, because you have all these merchants that receive this Bitcoin. And so you can go to this merchant and say, hey, can I buy $100 worth of Bitcoin from you? And the merchant will typically say yes, right? And maybe they will have a spread on this. They will charge, $101 or something like that. But the peer-to-peer market is something that we saw also develop naturally.
Fantastic. All right. Well, I think that's probably all we've got time for. So anything you wanted to finish off with for listeners, and what should they be doing out there if they're interested to get involved in some way or use the technology in some way?
So the best is to jump on our Slack channel. So if you go to our GitHub repository, it's Galoy Money, Galoy Money. And there is a link to our Slack. So join our Slack channel, and I mean, we need more eyes to have your code. So like if you're a developer, we'll be happy to, to have you as part of our community. And
Fantastic. Well, thank you, Nicolas. I'll include that GitHub link in the show notes for people. Thanks for joining me.
Thank you, Stephan.